the BankTalk podcast, the show where we talk to leaders and experts from the community banking sector. Whether you are a current CEO or aspire to be one, this podcast will give you valuable insights and advice on how to run your financial institution better. Each episode features a different topic and a guest who shares their experience and knowledge with us. Tune in and learn something new with BankTalk podcast.
All right, so we're started here. Hello, welcome to Bank Talk. I'm Rich Carty, your host. Today we have a great episode lined up with Jason Hicks, CFO of New Hampshire Mutual Bancorp and Affiliates. We're lucky to have him on, and we'll talk a little bit about their organization and a campaign of why mutuals matter. But hopefully you enjoy it. If you have any questions, feel free to reach out after. Hopefully you enjoyed. Hi, Jason. Thanks for joining us today.
Yeah, good afternoon, Rich. Happy to
I
be
appreciate
here.
you jumping on here. Why don't you kind of start our audience with your background specifically, and then a little bit more on New Hampshire Mutual Bancorp and Affiliates. It sounds like you're just in your 10th year as an organization. So let's do a little background to start, and we can dive in.
Yeah, happy to. Yeah, like a lot of people in my role, CFO, been in public accounting world, started out my career and then moved into the banking arena as an auditor of BB&T Bank back before they became part of Truist. That's how I started getting into banking way back then. And then moved over to the kind of the big bank world, Bank of America. Spent a lot of time in corporate treasury and investments. Worked almost on a couple dozen of their last acquisitions that they completed up through Merrill Lynch in 2008 when the government basically forced B of A to buy Merrill Lynch to make sure they didn't have any troubles like some of the other big brokerage firms. So a lot of learning happened at the B of A bank, but it was a lot of double time too. So I was looking for a little more work-life balance. So my family and I moved to Meredith, New Hampshire, and I started working as a controller for Meredith Village Savings Bank back in 2009, March of 2009. And that was my first experience being part of a mutual savings bank. I didn't really know how important that would become, but maybe we can come back to that later. But it's amazing how much difference there is in the culture of a mutual bank that's mission-based approach versus the quarterly stock earnings expectations, and the mutuals really have an ability to take a long-term view on its strategic goals. And then, a couple of years into that job, my then CFO said, "Hey, what do you think if we put a couple mutual banks together under a holding company model, shared service structure?" And of course, they were already working on that, so that would be great. I think it'd be a real interesting challenge. And so New Hampshire Mutual Bancorp was born in January of 2013 when we formed the first mutual bank holding company in New Hampshire to provide those services, shared services, to Meredith Village Savings Bank, where I was at the time, and Merrimack County Savings Bank. They were both around $600 million in assets at the time. The goal then, as it is today, was to create a shared service model that would help our banks remain mutual banks and continue to be relevant to their customers and in a sustainable, in perpetuity. So we recognize the need for scale to help, pay for the necessary talent and technology needed to serve our customers and compete in the banking space, because you have to compete with the B of A's of the world too, right?
Yep.
So today, 12 plus years later, we've got 3 independent state chartered banks under the holding company umbrella. In the summer of 2018, the Savings Bank of Walpole affiliated with the other 2 banks, and again, just the realization that to really be sustainable over long periods of time, we needed to get more scale. So together we span across New Hampshire with distinct markets and a dedicated wealth management company, the New Hampshire Trust Company. Prior to April of 2015, our wealth management businesses were embedded in our banks, like a lot of community banks have it. However, in fact, we needed to evolve that business into its own shared service function in order to, gain the scale and the talent and the technology again to grow and better serve our collective customers. So that's kind of where we are. And in my role now, in addition to, providing that centralized finance function, I've also got the responsibility as the CRO, and we run a decentralized enterprise risk management team driven by me and the COO and the CTO, and have got some oversight over the residential and consumer lending business units as well. So lots to do, like every company, but it's a little bit unique structure. So
Awesome. Appreciate the background in yourself and of the group. And you mentioned the term shared service model. Maybe take a minute just to kind of explain the advantages of, or maybe go into depth with that a little bit more.
yeah, so I guess really we've kind of got some things going on here. I would say let's maybe talk about what we're trying to do with the mutuals. Let's talk about mutuality for a moment. Mutual banks were founded over 150 years ago. For some of them, those individual business people came together. They created banks to serve their employees, their communities, give them a safe place to put their money at the end of the week when they got their paychecks, and then also lend out those collective funds to small business owners and home buyers. And people really wanted to increase, just the moral fabric and the well-being of everybody living and working in those communities. So our banks and employees still play those roles today, and we utilize local deposits to help, local business owners start and grow their businesses, assist people in buying homes. We all recognize that creating jobs and housing are key to our healthy local economy. And so we've got three principles we kind of live by with our keep our mutual banks mutual. The
Yeah.
structure allows us for that long-term view and make the most strategic decisions possible in a way to stay relevant and sustainable. Second principle is maintain our state chartered, independent state charters for each bank. It kind of keeps those decisions local. Our customers know their banker, they're their favorite person at the bank or their commercial lender, whoever, and we know our customers best. So keep that. And then gain those efficiencies everywhere we can to provide that best technology and talent to our employees and customers. And the order matters, right? Those principles. If efficiencies were prioritized over brand, that would lead to consolidation of the brands of the banks, and that's not our model. And if mutuality didn't matter, then we would just eventually consolidate and build the bank up, stock bank, and a lot of times that leads to just a eventual sale of the bank, and that community asset, right? That local bank, that local decision making gets lost, and it moves away from those communities. So we feel like that those mutual bank principles are important. And then you go on to the shared service model. The reason why we felt the need to get evolved to that level, because individually we couldn't provide that ourselves and get the best technology that a bigger scale company could get. So this allows us to kind of have the best of both worlds. We can have a shared service team to handle many of the back office functions that the banks rely on: IT, HR, operations, finance. We can do that for all three banks and our wealth management company, and then that really gives the front facing folks, the bank presidents, the affiliate presidents, and their leaders, their commercial lenders, their heads of retail, business development folks. That's all they hopefully have to concentrate on, right? And they can rely on the shared service teams to take care of. We all talk about the fraud in the banking industry. That's always a big nemesis, but they don't have
Oh
to
yeah.
worry about that as much because they got people they can rely on to handle it in the background. Um,
Yeah.
so you get those economies of scale. You attract some really good talent, right? A little bit more complex model. You grow the businesses, and as you get a little bigger, you attract some more talent and it creates new roles for people within the companies as well that they might not have gotten otherwise if we'd stayed smaller and on our own. So there's a lot of benefits you might not see initially, might not realize.
Right. Yeah. Within that shared service model, and we talk about the efficiencies, it almost sounds to some degree, and maybe we can distinguish this, something that you're hearing when two companies would merge. And there's probably maybe some hesitation that there could be potentially downsizing or maybe people that might get nervous on roles being eliminated. Have you seen that? Have you seen hesitation with asking groups on that? And I guess a follow up at the very end, is it most advantageous for them to merge into the holding company when someone might be retiring or leaving, if that made sense? But I'll let you kind of take it from there. Those are kind of what terms that I hear with what you're talking on the efficiency side.
Yeah. So yeah, certainly, like I say, when I was in Bank of America working in the stock bank world, when you did an acquisition, you had certain efficiency targets, right? Headcount reductions you wanted in a certain amount of time, and systems reductions and costs you wanted in a certain amount of time. I think in the mutual bank space, there's no consideration being paid up front, right? There's no cash being exchanged. You've got just two mission driven, or in our case, three mission driven companies that say, hey, we recognize we got to have some scale to compete, but we can be patient on how we get there. So, as we've gotten together, we recognize, hey, not for nothing, we've got some every industry's got an aging workforce in many cases, and maybe not as many bankers coming into the banking space. You hear that from the accounting profession and others, professional service providers, that just not as many folks coming into certain professions. Banking's kind of been in a similar way. So we're trying to grow our own internally, right? Grow the next commercial lender, grow the next, digital banking person, and so on, a wealth management advisor. So we're trying to grow our own talent. So when you find banks that want to affiliate, it's kind of nice to have, the combination of that talent pool,
Yeah.
because you can assess your needs. You can say, hey, we can plug in people together, and maybe they don't automatically, have the same job they did beforehand, but that's usually another really good complementary role, or something they're interested in. Or you say, hey, maybe we've got a little bit too many people day one, but as our workforce retires, attrition is an easy way to kind of right size the number of employees for the bank size. So, and you grow too, right? That's the other nice thing. As you grow, you're gonna need a few more people.
Totally. Yeah.
So it doesn't have to be necessarily about or getting nervous, or having a succession plan need. Sometimes that's very helpful. If you can fill some gaps with some, combining the talent pools, that's great. But I would say, as far as timing, of affiliations happening, a bank doesn't need to wait until they have a succession need to think about forming, maybe a mutual holding company. In fact, I suggest it's probably the opposite. If they have recognized the need for scale and relevancy and think this model could work for them, then they should seek to achieve that while their established leaders are in place. Their employees trust them, and can help. Those leaders can champion that effort, and really, because it's a cultural shift, right? It's a mindset change. We're now going to be part of something bigger. You're still going to be yourself, but you're also going to have a peer network you didn't have before. So it's, again, I think there's a lot of benefits that people can realize with something like this.
Okay. Yeah. So a lot of those C levels are probably staying there, like you mentioned, the growth and whatnot, but they're not maybe losing positions because they're still needed within certain roles.
Yeah, I mean, not for nothing. When we came together, we've created some C-level roles we didn't have before. As we've grown, collectively bigger and broader. We didn't have a chief digital officer before. We didn't have a chief strategy officer, and so on. So you kind of look at that roster, right, of employees, and say, hey, that person would be really good at this,
Right.
and we need that today. And now that we've got a couple people with maybe some overlapping skill sets, we can dedicate the person who's interested in moving into that role, that new role.
Yeah. No,
So
that's
it's
good.
a good way. Otherwise, you couldn't necessarily do that if you were, a smaller bank, didn't have that need, that kind of thing.
Yeah. Awesome.
Yeah.
All right, Jason, let's switch gears to branding. After the merge into, say, a holding company environment, do the FIs keep their brand, and what's the philosophy around that?
Yeah, so I'll call it affiliation, not merger. Merger sounds like a bad word when you're in a mutual.
Yeah, go for it.
No, but yeah, I mean, after the banks come together, the question is, do they keep their individual brand, and what's our philosophy? So yes, each bank keeps their own individual state charter for one. I mean, as a legal entity, there's still a separate charter, so they continue to manage and grow their brand. The philosophy is that with a shared service team now in place to support each brand, each bank, that bank's leadership and staff can really focus even more intently on being present in their communities. Volunteerism is always a big thing with community banks, but they can even get more involved with nonprofits, the initiatives that matter to their employees and the communities they serve. And they'll have a little more time to understand the needs of the customers and serve them more completely, and with a broader set of products and services. That's another thing we've been able to do. As you get some scale, you can offer a broader set of products and support that broader set with your shared service team. So that's all the while shared service team is taking care of those operational aspects, right, of the bank. And if we're achieving our goal, customers only know their local bank, and they don't even know New Hampshire Mutual Bank Corp exists in the background. And I think so far we've been pretty successful at that. People just know their local bank, and they still love their local folks, and that's what matters.
Okay, awesome. For our purposes, at Remedy here, that's something close to our hearts, as we always say, within the technology contracts. probably a little bit more discussion and strategy that goes into that, because does each bank have its own tech contract? What goes into that, not only with picking what's working, but in terms of the negotiation when those contracts are up?
We'll be right back.
Is your technology spend getting a little out of hand? Are you worried about making those big strategic moves because of those hefty vendor contracts? Or maybe you just feel like your technology is currently holding you back. In today's banking world, overspending on technology is a risk you just can't take. Going up against those major vendors on your own can be tough, expensive, and especially when the contracts are designed to benefit them. That's where Remedy can come in. Remedy Consulting helps our clients stay competitive and grow their business with the right technology, products, and their spending strategies. Not a Remedy client yet? Head on over to remedyconsult.net for a free review of your tech stack, spending, and contract terms. Even if you're not the perfect fit, you'll walk away with expert advice and confidence in your technology decisions. Check us out at remedyconsult.net or give us a call at 262-955-7776. Thanks for tuning in, and now let's get back to the episode.
Yeah, so that's a good question, and that's near and dear to our heart as well, Rich. Because when we first had the first two banks that came together, a lot of times in that original kind of merging and finding the best systems, right? The best vendors, the best software that we wanted to keep for the whole company and get onto one platform, one core system, one online banking system. We started with probably one bank had Jack Henry, and so we added Merrimack County in our case was the second bank onto Jack Henry. So a lot of times we'd start with that original Meredith Villages contract, and then we'd add on that new bank, and that wasn't very efficient. And we did the same with when SB Savings Bank of Walpole came in, kind of added them on to the Jack Henry contract. But we realized over time, and that's not getting us where we need to be. So more and more, we're going back to the drawing board with our preferred vendors, right? Our key vendors, and saying, hey, we're bringing you three banks. They all are set up from a process standpoint, and many times the management team, since we've got shared service members, running some of those, and IT in the case of software, it's usually the same folks running it for all three banks. They look and feel all the same. We really need to get to a cost structure that's 1 + 1 + 1 doesn't equal 3. It's got to be something less than that, because we're providing some value, right? It's not like they're having to do, our vendors are having to work with three totally different setups. It's not like that. So we're bringing them a little easier environment to operate in, and more banks to operate with. And we're working with our vendors to say, we love the long-term partnership. We like the roadmap your company's going down. We're trying to pick the right vendors for the long term. And then if we can work things together and create deep partnerships like that recognize the value of our model that we're bringing, then we can be really good, not only working relationship and getting the pricing where it needs to be, but we can be good ambassadors, right, to our other banking friends when they're going through and thinking about perhaps creating their own mutual holding company. There's been a lot of them that have started in Massachusetts over the last couple of years. So we've chatted with a lot of those folks and happy to share what we've learned over the years, and hope to, have some good back and forth and kind of create the best model we can in this mutual holding company space. But yeah, it's definitely about trying to get those efficiencies, as you say, negotiating as one entity.
Yeah, since 2013, I can't imagine have quite a few of the renewals come up. But has there been resistance to, say, moving to a specific tech vendor versus another one, or has there been any objections internally, not with the New Hampshire Mutual itself, but maybe the ones under the umbrella?
So do the affiliates have any trouble aligning ourselves?
Yeah, exactly.
Yeah, I think that's where the culture is important, right? When you start talking to another bank, culture comes first. I mean, that kind of decision to come under the umbrella takes a while. It takes a year or two. It's all about the culture. It's the social issues, the board and leadership, and how we're going to put the staff together. But you got to, collaboration is important, and we put together, say if it's a retail system or service software that we want, all heads of retail get on that and say, hey, let's go through the options here together, and let's try to pick the best one collectively and do the pros and cons. So we've gone through a lot of that actually, and we've gotten better and better at that. It's not perfect, but pretty have a pretty collaborative process. Yeah.
No, I think even if it was an individual group, they're going to do the same thing with their own committees
Sure.
and so
Yeah.
forth. Like you said, collaboration's key. Talking about the Mutuals Matter campaign, maybe explain a little bit to the audience what the Mutuals Matter campaign is about and how that might tie in.
Yeah. So mutual banks have been trying to get customers to understand what we do and why we're different from stock banks and credit unions for years. This has proven to be a futile effort if you try to do it on your own, one customer at a time, one group of customers at a time. It just takes a while. One-on-one, I mean, people get it, right? And you can explain it, and people are like, man, you guys are doing the right thing. You're mission driven. You're a community asset. It's great, and they love you for it. But that takes a long time, right? One at a time. So several bank CEOs have come together, and Greg, our CEO, has really spearheaded this. But there's several CEOs particularly on the northeast side of the United States, and the one in Cincinnati, Ohio, Tom Frazier. They've come together to create a collaborative consortium of mutual banks via the Mutuals Matter Association. They've set it up as a trade association that's going to create the marketing materials that all mutual banks can use for a nominal fee based on asset size, to promote what a mutual bank is and why we're here. And so some of the key points that you'll hear us talking about, and if you go out to our Mutuals Matter website, you would see a lot of points like little attention getters to say, hey, you care about the products you use, where you get your clothes, where your food comes from. Shouldn't you feel good about your bank too? Mutual
Yep.
banks, they have all the products and services you'd ever want, all at competitive rates. But when you put your trust in a mutual bank, you get something even more valuable in return. That's our promise. You get the opportunity to make a real impact in your community. You help us stay true to our mission to build senior centers, support little leagues, transform vacant lots into housing developments. It's what drives mutual banks. That's why we exist. That's why we started, and to serve the best interests of the community, your community. So together we can be part of something much bigger, and we're trying to do this nationally, make this a national campaign. And we're trying to keep these mutuals around for a long time. A lot of them have been around a long time, like 150 years plus. Something we can all believe in, and that's why we think mutuals matter. Just to share one quick little story. This is why I love. I didn't know what mutuals meant when I first got here. I said that in the first of this little segment, but the fact that you, as a mutual banker, you're going to run into people all over town that know you work at the bank, even if they don't work with you directly, they'll come to you with problems that they need to solve, right? I'll never forget this senior guy that works at Napa Auto Parts in my hometown in Meredith, New Hampshire. He didn't get his veterans, retirement pension check one month, and he said, "Hey, Jason, can you help me out?" I said, "I can't personally, but I know exactly who to call." And we got him all taken care of, and he's just a raving fan of the bank after that. So that's why mutuals matter. It's kind of our got milk moment. We believe that together we can create an awareness in our customers of what a mutual bank is, and not only our customers, but new customers, why it matters, and they'll become a customer if they aren't already, and they'll tell their friends and their family, and because they'll see the value in it. So, I would say check out mutualbanksmatter.com for some more information.
That's great. I think that's a great way to kind of highlight a good story within your community and why that kind of goes a long way. Not to mention, I love the Meredith area, and I know you're saying work-life balance to start, like you said, not a bad
Mhm.
place to be doing it up in New Hampshire there. So that's a great place to be.
Yeah, we love it. We love it. So.
Well, is there anything else we missed, or anything else you might want to cover before we kind of wrap this up?
No, I appreciate the time, Rich. Appreciate the time to talk about what mutual banks are, what mutual bank holding companies represent, and hope it helps somebody else out there.
Well, Jason, again, thanks for your time today. I think this was a good one to just kind of recap or maybe be a refresher for people. And if anything, I know that my kids love the stickers of why mutuals matter. So look out for those ones at the next event.
That's right. That's right. Well, thank you very much.
Yeah. All right. Well, take care, Jason. For everyone who joined today, thanks for being a listener. If you have any other topics you think that would be of interest, feel free to reach out to Remedy. Have a great day. Keep on learning. Thank you.
Thank you for listening to the Bank Talk podcast, brought to you by Remedy Consulting. If you like what you hear, please rate, review, and share our work with others. Thanks again, and we'll see you in the next year and next episode.